What's up YouTube? I am back with another YouTube video. In this YouTube video, we're going to be going over how to read Flowtopia. If you don't know, Flowtopia is an application where you can follow the rich, follow the institutionals, follow the whales, see where they're putting their money at, and be able to follow those exact same option contracts. Whether you're an investor, a swing trader, day trader, whatever it might be, this is for everyone if you're trading. The reason why I always like to preach using this tool is because for retail traders, this is our way to get an edge on the market. You might think this indicator is the way to get an edge, but really, in reality, this is the way to get that edge. And let me explain why before we get into this tutorial. If you don't know, institutionals and whales make their money off of retail traders. Us, including myself and the viewer that's watching this, we are retail traders. And so one of the best advantages that we can get while using this application is see what they're buying, see what they're selling, see how much money they're putting into this certain stock or ETF. And you know the saying in regular day-to-day life, follow the rich, because the rich only get richer. I'm gonna make this a short and simple YouTube video. If you need to rewatch it, definitely do so. Also, what I like to tell people is after watching this video and reading the flow, like going to actually read the flow live, you'll be good within like 2 or 3 days. You'll understand everything. And if you don't, comment down below and I can maybe make a YouTube video about that, or just send me a DM. With that being said, let's get into the real-time option flow. This is right here on the middle of my screen. What we're looking at right here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different columns. Now this looks crazy, but it's very, very simple, guys. Very, very simple and very self-explanatory. So the time, I'm in Central Time. It's 11:56 on my phone right now. So these orders are all coming in real time right now at 11:56 a.m. The ticker is the stock that's being bought, or the ETF that's being bought. So we got MicroStrategy right here. We got Royal Cruise Lines. We got Meta. We got AMD. We got Amazon. We got all these stocks, right? That's the ticker. So the expiry is the expiration on your specific option contract. Now this one right here is for January 17th, 2025. This one's for March 21, 2025. Very self-explanatory. You're going to find this on your brokerage. The next one up is the strike price on your option contract. This is very self-explanatory as well. So usually how you look at these option contracts is you go to your phone or computer, you go to whatever brokerage you're using, you type in the stock you're looking up. If you're trying to follow the trade, right? You type the stock you're trying to look up. For this case, it's Boeing. And then the expiration is the next thing you need to type in. And this one's for January 17th, 2025. So you go click that date. And then you look at the strike price. And you click on the strike price they're going. And then call. And then, so forth. That's just an example. One example. It's very self-explanatory. After you do it a couple days, you'll get it down. But the next column is calls or puts. Very self-explanatory. A call is bullish, a put is bearish. But we got to get into something that you have to know by following the flow. It's one of the most important things. When a call is being sold, it says to the bid or below bid. That means that call is being sold. Typically, that's bearish. And when the call is being bought, that means it says to the ask or above ask. So call sold is red over here. Call bought is green over here. So green means bullish, red means bearish, right? So that's one way you can look at this. These puts right here are at the ask. So that means they're buying those puts and looking for a downside move. And then the next column is called open interest. It's just OI. This is how you determine who has and how many of contracts are being bought or sold at the moment. These are all opened positions. So this contract has 290 open positions. This one has 1,851 open positions. Typically, most people like to look at open interest to see how active these contracts are getting hit and how active they're getting sold or bought. That's another time for another video. I'm just showing you how to read the flow. But yeah, that's what open interest is. Detail this. So the left side of the @ sign is 498 contracts. So this is how many contracts they're buying and what premium they're buying it at. So they bought 498 contracts at $343 a contract. Equals out to 230.6K. But that's how you read that. It's just contracts at what price they're buying at. So typically when I'm trying to follow institutional whale, I want to see how many contracts they're buying and what price they're buying at. And that's what detail shows you. So right here, this whale bought 1,000 contracts at $100 a contract. So this is a very affordable contract. And so if I wanted to follow it, I could, right? They bought it at $100 a contract. So if I get it for a steal under $100, then I'm happy with it. You know, that's one way you could look at it. Now the type is large, sweeps, blocks, and there's one more. And golden sweepers, but it's really usually just a large. Sweeps are typically the aggressive order. So what they like to do is buy multiple of those same contracts through multiple exchanges or brokerages. That's what a sweep is. They are way more aggressive than a block order. A block order can typically be negotiated and tied to the stock. I usually don't like to follow block orders, but we have them just in case people like to follow those. Now moving on to the premium. This is very self-explanatory. Premium is just how much money they're putting into this contract or selling for that much, right? So 140K, 306K. This is how you can see how much money they're putting into these option contracts. So I'm going to go over the sides one more time. If it's a call to the ask, it is bullish. If it's a put to the ask, that is bearish. Now let's go over to the bids. If it's a call to the bid, that equals out to be bearish. If it's a put to the bid, that equals out to bullish. That means they're selling those puts, which is actually bullish. That's all you really need to know reading these sides. Above ask is very aggressive. Below bid is, I guess you can say, aggressive as well. But I like to look at above ask and ask trades. I got to move my face for this one, but the market sentiment is bullish. And the way they calculate that is basically just looking at the call flow to put flow. How many calls are coming in and how many puts are coming in. That's how they calculate if the market sentiment is bullish. They're just tracking the whales, seeing how many calls are being bought and see how many puts are being bought. And then the top flow indicator. This is one of my favorite indicators on the flow. Basically, they look at all the stocks and all the institutions putting in these orders, right? And whichever stock has the most orders being placed on it, that pops up on the top flow. And then it will tell you if it's bullish or bearish orders. And then sometimes for this case, it is neutral. Now, moving on to the filters, super self-explanatory. Premium means how much money they're putting into it. You can go all the way up to $1 million. Over $1 million, you have all the golden sweepers. All the ones that are putting over $1 million into singular option contracts. Those are very fun to follow. The next one up is contract price. If you want it above $500, you click this one. If you want it above $1,000, you click this one, $1,500 and $2,000. I typically like to keep it under $500, but sometimes I'll find a trade that I like to take for $700 a contract. But you don't have to do that. You can keep it at like bare minimum $50 to $100 a contract. Those are typically more risky though. The advanced filters, you can find the leaps, you can find short expirations. Those are the quick moving one, the more aggressive orders. Non-ETF is just going to pop up everything besides SPY and QQQ. Out the money, pretty aggressive if they're going out the money. What you're looking at here is the expiry date. This is the expiration date. This is for today, this week, this month, 1 year more, or all. If you're looking for a quick trade, that's for today, obviously. If you're looking for a little quick trade, that's this week, this month. It's just very self-explanatory. You can definitely just go through this, play around, figure out the strategy you like. Me personally, I like to look at this month, and if I want a little less riskier trade, then I will look at 1 year or more. Next up, we have call and puts. You're looking at calls and you're looking at puts. Very simple. The side, you can look at above ask, at the ask, bid or below bid. If you're looking for aggressive orders, you can do above ask and do calls if you're bullish, or puts if you're bearish. If you're looking for sell orders, you can do bid and do calls and puts. But typically what I like to do is do above ask and just look at calls and puts. Now moving on to the historical flow. This is one of my favorite things. This is how you can back test the strategies, back test all these whales. You can search any ticker at the top left. I'm going to move myself out of the way. You can search any ticker right here. Let's just do coin. And this chart will tell you how many calls versus puts are coming in just for today. You can do last 1 day, it's up here. And then you can do last 20 days. And you can see the call versus put flow. Coin obviously has had a lot of call flow coming in, way more than put flow over the last 20 days. This is just one example. You can do it for Tesla, you can do it NVIDIA, you can do all the stocks out there. Not to mention, this is how I was able to turn $1,000 into $7,000 on my last YouTube video. If you watched that, if you haven't, go check that out. But that's how I was able to do that. Next up is the historical data. You can look up any option contracts from the last 20 days. We can do NVIDIA. We can do the last 20 days. We can look for We just want to look at calls, side. We can do add ask, and let's see what pops up. And here you can see all the calls being placed from the last 20 days you can look at. But yeah, that's how you're able to track all the whales in the historical flow. That's how you're able to use Flowtopia.co to your advantage. And if you want to sign up, make sure to go to Flowtopia.co. If you have any questions, leave them down in the comments. I'll try to answer them as quickly as possible. I hope you enjoyed this tutorial. And until next time, I'll see y'all later.